And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Thursday, June 17th, 2021. And totally bizarre day. And of course, as I left it off with everybody yesterday, the way that the market reacted after the Fed announcement, the rally after, and then the decline was suggesting a more downside move that could have gotten pretty serious. And that would have been relatable in terms of that this wave would be where it all stopped, the top of the top of the top. And so that would say that this is going to continue down. The other one that we were looking at and that I left in, so it was more preferred, was this was a subminute wave 4, and that there was a 1 and a 2, and that suggested that this thing needed to launch. Now I remember talking about it last night, and I basically was telling everybody, I said, well, the way that this came down, and still the Asian markets have to digest it, and the European markets have to digest it, so I don't know. And got my answer real quick. The market took off. The market took off in all of your charts being in alignment and pointing higher. So it was one of those mornings that you basically just kind of play and you make your money real quick and you're done. If you set a goal, if that goal's $1,000, if that goal's $1,500, whatever your goal is, and you set out to do that, this was the type of the day you could have gotten it done in a couple of, maybe an hour, hour and a half. So that's the good news. Also, the good news is the market made it very, very clear what its intentions are. And as I suspected, I thought, and I said, if this is indeed going to be a third, 1, 2, and this is a third going up of this first sequence up in terms of minute wave 5, finish minor wave 5, then it needs to launch from here. And it did. So I don't know if we're going to count this 1, 2, and this is 3, and this is 4, and then we're going to go to 5, because we've now continued to, we put in an additional new high at 4,199. And we had a target up here at 14,234, 235 to complete what I want to put in as a third wave. So maybe this was 4 and this is going to be 5, and it's going to end up here maybe in as high as there, and it's actually just going to be the first 5 up. But the trick is here, again, as we continue to make new all-time highs, we could say the sequence is finished. That's it. That was minute wave 5. And because I'm counting 1, 2, 3, 4, and this is going to be a 5th. So wherever it, and I would be looking for new highs, which it's already done. I'm expecting more. But that's next resistance, and this is most common. So where wave 5 would be equal to 1.618, or about 62% the length of wave 3. That's most common. And that sits right there. So if this does 5, that could be it. And it's a new high. So there you have it. Now, if it's only the very first wave, we're going to start going out into these other, this is just particularly for a 5th wave. This is that larger 5th wave, the minute 5th wave. This is where it could go. So again, if we're looking at this and it's possibly completing 5, but it's only wave 1 of this little bit larger 5, then we're going to get up into the rafters here. Seriously, we'll get up into the rafters here, because then I'm looking at this level is where this degree wave 5 would be expected to complete. And that's at 14,570. So that's up there. And many are going to say, it's up in the rafters, it's up in the nosebleed section, et cetera, et cetera. But we have to just allow the market to tell us. Because again, I'm going to go back down and say that if we came in today, every time this thing was upticking against yesterday's news, you thought you got to sell it, but we came in with an idea of, well, if it does this, it's going to be this wave count. It's going to be this type of a structure, and this is what we would expect. And get it, then you pay attention to the rafter numbers, because it had no, seriously, this market had no problem breaking to a new all-time high. But right here, one swoop, it paused briefly, and this went there and went straight up and then slid down, but managed to come all the way back and put in another an additional one. So it's there. And I want to say also, it's like this rally, I think that was yesterday's fund buyers, hedge fund guys, mutual fund guys. Remember, we've been talking about it, that they're getting settled up for the end of the month, the end of the second quarter. And tomorrow is quadruple witching. And markets will trade, even though now Juneteenth is a federal holiday. They can't have it off tomorrow. Markets will be open. In any case, we got what we were expecting. And that's why, and again, that was up into all-time new highs. And you just continue to follow analysis and the power of it, and the moving averages and your Fibonacci's. And price just becomes exactly that. It's just price. And what I would expect it not to go quite as quickly, that people might be a little bit more cautious to be spending, paying all-time highs in an index. Yeah. And finally, it did draw enough sellers where it was like, okay, they're going to take it back down, but enough. So for tomorrow, I would suspect that we have a pretty high chance. And again, I'm going to reference this and say, as I say this, it has an equal weighting to do exactly the opposite. Okay. So, but if they're going to follow through to the upside, I think it could be exhaustion. So, I mean, it gets up here and then we find much more intense selling. But it could be a nice zip ride all the way up. But that intense selling, that could start at any of these levels. This would be the expected, simply because of the relationship between what we're doing to this. So if this is a fifth wave, it's going to be matched first against this third wave, because it's all the internal move, part of the larger fifth wave. Okay. So I would suspect that it could get up, and I would be looking for at least that level, and it could do it real quick. And then we're going to get a little bit larger correction, and that initially, right, we'll be correcting the rally from this point to wherever this ends up. And I would look for here initially in this particular area, because the most common relationship when you finish a five-way structure, and maybe it's a wave 2 correction, it should come within the territory of the previous fourth wave of one lesser degree. That's this one right here. So that's upside. If we walk in tomorrow and it says, nope, we are going down, then that 14,199 high right there is going to be wave 5 of this little structure, and it's going to come down. That's me. First place I'm going to look as well is into this zone, and pretty much dropping back to 14,060 would probably be a breeze. The way they took it up, the way they can bring it down. And trade using your moving averages would come in handy, and they do guide, and they do tell you when it's going to stop and tell you when it's going to turn. More on that if we all join the trade room, because that's trade room talk. That's it. The next update will be on Sunday, June 20th.